price just sticks at that price. That's called an iceberg sell at that point there. That's an iceberg sell. So when that iceberg sell comes off, you can see there's a lot of sellers coming into the bid here. So there's sellers hitting the bid hard, but it's absorbing. That's why we get the block trades, because they start hitting the bid, hitting the bid, hitting the bid, hitting the bid, and it doesn't move. So that's a buy limit order absorbing the selling at that point, and that's usually a buy trade. So when you see this big block here, that's a lot of sellers hitting the bid. That's usually a buy reversal right there. And when you see these offers hitting the bid, that's got a pink box around it. That means it's an ice order, so there isn't any bids to hit, but they're still not moving anywhere. That's usually a reversal buy order as well. That's usually something that you can buy against as a gold trader. Well, if you just did those 5 arrows, how do you think you'd have performed as a trader on gold? How do you think you'd have performed as a trader in gold doing the limit side of the book, being the house, as we called it this morning? You'd have done pretty good, wouldn't you? You'd have done pretty good. It would have been a great series of trades, wouldn't it, most of the time? Now, it's not always the case, because obviously a lot of the times if you get a big series of sells and they just keep selling, the buy liquidity pulls away. The buy liquidity pulls away and the price collapses through the price level. So you could be on the wrong side of a soaring, right? But obviously you're going to know what that is because you're adding value to this. So when you add value to it, the chances that somebody goes after a big position is almost reducing the probabilities or increasing your probabilities to like high 90s, because for somebody to go after a position up here, for me to sell into that, I would want to know that the value is offered, because somebody wants to keep buying at that price. The big commercials are just keep saying, okay, how much? How much? Keep on giving me a bit of business. But if I scroll back and I look at the big trades, we talked about that 74 lot at the bottom edge there. That 74 lot at the bottom edge was also part of a couple of other smaller buy blocks. So there's a buy block just there, a perfect buy trade. That big sell block up here was huge. Perfect sell trade. This was a huge buy block right there. Perfect buy trade. So you can start to recognize some of these elements, can you? You can start recognizing that just trading these buy and sell blocks could make you a lot of money in its own right, so long as you obviously get a chance to look at them and trade against them. How do you trade against a buy or a sell block? The safest way is to put a buy stop order above the orange line that you see appearing on the buy block. What's the orange line? The orange line that you see on the buy or sell block is the POC. So when you see this line forming, you'll see there's a little orange line in the middle of these squares. Sometimes it's actually removed from the square. But when you see the orange line, that's a POC. So when it goes above that, that creates a trade that we call the tipping point. So as soon as the price trades above that orange line, that's the tipping point, and that's where your buy orders become the strong hand against a weak seller. So as soon as you go above the orange block, you become the strong hand against a weak seller in the short term, at least anyway. And obviously you work those sell orders. You work those sellers here. You work those sellers here by buying against them when they're weak. And the idea is that they throw away their positions. They puke up their positions at that point. And obviously all you've got to try and do is be in it so that when it does break, you make your monies. If it breaks for a big swing, you make your big monies. But these become critical levels as well. Because if you start buying big blocks in these areas, these are also commercial accumulation zones. These are also commercial accumulation areas. And obviously what you're hoping to start seeing is you're hoping to start seeing some solid buying up at these top edges up here, instead of what we've had before is exhaustion, 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 exhaustion. So for us to make a break through that level as a buyer of gold, we need those exhaustion sellers to piss off basically, and replace them by buyers at the high prices. If we get that, this market will break up to 1846s, easily 1846s. and that'll give you a $600 profit on that trade. So to answer the question again, if you trade into the bids, then there'll be a sell market order here hitting the bid. It'll show up as a red block into a bottom edge being absorbed. If it's got a pink box around it, it means that the bids aren't visible. It's called an iceberg order. And that's going to be a reversal trade most of the time. If you're lifting the offer, it means that you're trading across the spread as a market order buyer, and you're buying into the offers above you. And that's usually a good reversal trade on the short side, because we're obviously adding size to this as a narrative, because there's buyers and sellers on every candle, but we're adding size as part of this jigsaw puzzle, so that we can see how much size is coming in, so we can dismiss the small ones and really try and play with the big hitters. When they show up on gold, they'll be visible in these boxes here. When the big hitters show up, the box will be visible. The big hitter will make themselves known to you, and as a local, you're basically trading leaning against these big hitters. And this is probably, I might be wrong, but this is probably the mainstay of Paul's trade on gold. Yeah, would that be reasonable, Paul? That leaning against these big hitters is the mainstay of your trading on gold just now as a trader. Yeah. So when you're going to lean against a big hitter, you've got a couple of big advantages. The big advantage is that the seller's at a terrible price and they're in trouble. And obviously, if you add value to that, then obviously you're in great condition to make a lot of money. If we can add a bit of book value to it, as happened on this one, you can see that book actually started to go bullish. So that obviously adds to the quality of the buy side here. As soon as you buy into that, you want to see the buys coming in on the book to fill in behind you, because that supports the buy trade. That's called the refreshed order book, especially if it comes in after a nice order. So, for example, if I started to see a red candle up here, a big green buyer getting absorbed up at the top edge here, then obviously I'd be watching to see if they were starting to refresh the offers. If they started to refresh the offers behind a block trade up here, I could lean against that, take a short trade, and I would expect with probably a 90 to 95% probability to make money on the short side of the book. Good question. Good question.